Florida payment shock is real. You tour a home, the mortgage looks fine. And then your monthly payment jumps, sometimes by hundreds of dollars. Today I'm breaking down the three biggest reasons Florida payments increase: insurance, property taxes including CDD, and HOA fees, plus how to spot the warning signs before you fall in love with the house. Dominique, a homeschooling mom and your real estate advisor. Welcome to Homes with Dom. Quick reminder, your monthly payment is usually more than just principal and interest. Most buyers pay PIT, that's principal, interest, taxes, and insurance, and sometimes an HOA on top. So when any of those change, your total payment changes. All right, let's dive into number one, and it's the biggest wild card in Florida: homeowners insurance. Your lender typically collects your insurance premium monthly inside your mortgage payment through what's called an escrow account. So when your insurance premiums go up, your total monthly payment goes up right along with it. So why does insurance get so crazy here in Florida? Well, roof age is huge. An older roof often means a much higher premium, or you might find you have very limited options for coverage. Next is wind mitigation. This is a big one. A wind mitigation report shows how well your home can withstand strong winds. If you don't have a good report or it's outdated, you can expect to pay more. Then there's flood risk. Even in areas where flood insurance isn't required by your lender, the risk is still there, and it can impact the coverage you choose to carry for your own peace of mind. And of course, location matters. The closer you are to the coast, the higher the wind exposure and the area's storm history, all of those factors can drive your costs up significantly. Even prior insurance claims on the home or in the surrounding area can affect your pricing. So here's a practical tip, and this is super important. Before you even make an offer, ask these questions. How old is the roof? Is there a recent wind mitigation report? What is the current owner paying for their premium? And most importantly, get an insurance quote early. As early as you possibly can in the process. Just to give you an example, two homes at the exact same price can have totally different monthly payments if one has a brand new roof and a great wind mitigation report, and the other doesn't. It can make a difference of hundreds of dollars a month. Okay, on to number two, property taxes. And in Florida, there's an extra piece that can make your payment jump called a CDD fee. Here's how it works. When a home sells, the property taxes can reset closer to the new, higher market value. If the previous owner had a homestead exemption, their tax bill might look way lower than what you'll actually end up paying. Now, let's talk about the CDD, or Community Development District. It's a special taxing district that finances the infrastructure and improvements for a community. We're talking about things like roads, sidewalks, stormwater systems, and sometimes amazing amenities like pools and clubhouses. The important part is this: the CDD is often collected on your annual tax bill, which means it can be rolled into your escrow account, directly affecting your monthly mortgage payment. This surprises so many buyers. Some people think the CDD is just part of the HOA fee. It's not. It's a separate charge, and some property listings don't make the CDD fee obvious, so it's easy to miss. This can be a noticeable annual cost, adding hundreds or even a few $1,000s per year to your expenses, which then gets broken down into your monthly payment. So a few key things to remember here. The homesteaded tax bill from the seller is not a good indicator of your future bill. For new construction, taxes can jump significantly once the home is fully built and assessed at its full value. And as I said, that CDD can add a substantial amount to your yearly costs if your lender underestimates your escrow needs at closing. They'll adjust it later, and boom, your monthly payment goes up to cover the shortfall. Here's your practical tip for taxes. Don't shop based on the current tax bill. Shop based on the estimated taxes after the purchase, and always ask, is there a CDD? How much is it per year? And will it be included in my escrowed monthly payment? Finally, let's talk about number three, HOA fees. And it's not just about the monthly dues you see up front. It's also about what can happen later. HOAs can, and often do, raise their regular dues. But beyond that, some communities have to issue special assessments. This means you could owe an extra amount every month or a big lump sum if the community needs to fund major repairs or big projects that weren't budgeted for. So what drives these HOA costs? Well, it's all the amenities, the pools, the gates, the landscaping, security services, and the clubhouse. Sometimes a neighborhood can even have a master HPOA plus a smaller neighborhood HPOA. Yes, you might have to pay too. The insurance and maintenance for all the common areas are also big factors, and older communities that have put off maintenance for years can suddenly face huge repair bills that get passed on to the homeowners. So before you buy, here's a simple checklist of questions to ask. What are the current dues and what do they include? Are there any planned increases in the near future? Are there any current or upcoming special assessments? And a really important one, how are the HPOA's financial reserves? Are they healthy and well funded, or are they running on a tight budget? A healthy reserve is a great sign. So to quickly recap, if you're wondering why Florida payments can suddenly jump, it's usually one of these three things. First, homeowners insurance changes, especially with roof age and location. Second, property taxes recalculating after the sale, plus those sneaky CDD fees. And third, HPOA fees, including dues increases and surprise special assessments. Navigating all of this can feel overwhelming, but it doesn't have to be. If you want, I can help you run a quick real payment check on any home you're looking at. We can get an insurance estimate, a proper tax estimate including any CDD, and do a full HPOA review. That way, you know exactly what you're getting into, and there are no surprises after closing. Just reach out and let's make sure your dream home comes with a payment you can feel great about. Thanks for watching, and don't forget to subscribe for more real estate tips.